Hey guys, it's Dan here. In this week's episode, let's talk about the different types of investors. So this video is for everybody who wants to understand what is going on behind the financial markets. Who are these investors who are investing in publicly traded companies or in private companies? So basically, what are hedge funds, what are pension funds, what are institutional investors or retail investors? What is private equity, these kind of things, and I will try to make it as simple as possible, going through the different categories of investors, so even if you're a total beginner you should be able to understand what's going on behind the financial scene. That being said, ladies and gentlemen, let's go. To get started, actually there are three types of investors. First of all, there are the retail investors, then there are the institutional investors, and then number three, there are the private equity investors. So in this video we will talk of course about all three of them, and especially for the institutional investors we will go much more into detail because there are a lot of them, okay? So first of all, to have a quick overview, what are retail investors? Well, retail investors are super easy to understand. It's basically the you and me of the investment world, okay? So retail investors are private persons, like you and me, who want to invest, let's say, in the stock market or bond market or different capital markets, okay? It doesn't mean that that the amount that is invested per person is small, because even family offices, so very big wealthy families, let's say with 50 million or 100 million dollars or something in a fund, can still invest as retail investors as long as they are not doing it for someone else, okay? If they do it for themselves, they will also be part of the retail investors, which has a big advantage actually, because as a retail investor you are not heavily regulated, of course, okay? You can do whatever you want, more or less. You can invest in any kind of legal activity, and there is not much regulation for yourself going on. Of course you have to pay your taxes and all that stuff, but that's a different topic, okay? Then once we have talked about the retail investors, let's quickly talk about institutional investors. So what is the big difference? Well, institutional investors are huge financial institutions. That's why the word institutional investor. And well, you have different types actually. You have huge financial institutions, but you have also huge funds. And the big difference between institutional investors and retail investors is that in this case here, they are investing money, but not for themselves, but for someone else, okay? A huge asset manager, which is an institutional investor like a BlackRock, for example, is not investing its own money into the stock market, for example, but they are investing the money for someone else. That's the big difference with the retail investor, and then of course the size and the regulation as well, because these guys here, like banks and these kind of things, are heavily regulated, okay? And the last very important group are private equity investors. So again, that sounds pretty fancy, but it's pretty simple to understand. You always have to think, when as an investor, am I investing in a publicly traded company, for example, a company like Apple, or am I investing in a private company which is not listed on a stock exchange? For example, Airbnb listed at the end of 2020, which means in 2019, for example, you could only buy Airbnb through a private equity company because the Airbnb was not listed on a stock exchange. So what do private equity companies do? Well, basically they are specialized investors, which means they are companies investing only in private companies. So they will not invest in companies like Apple, which is a publicly traded company, but let's say in the very young startups, for example. But here again we will differentiate, because there are different levels and different sizes of private equity companies, so we will talk about it later in the video. Now that we have understood the three big categories of investment or investor types, let's drill down a little bit more, especially on institutional investors. Retail investors were pretty simple to understand. It's just the you and me of the investment world. So every individual who invests directly in the stock market, for example. Institutional investors, there are a lot of them, so that's why I would like to showcase you a few of them to make it easier to understand, because these are definitely some words you have heard, and institutional investors are kind of complicated if you don't know exactly what you're looking at. So I'm trying to make it as simple and transparent as possible, and you will see it's not that complicated actually. So institutional investors, as I just mentioned earlier, are huge financial institutions or funds who invest money on behalf of someone else. Okay, so they're not playing with their own money, but they are investing money for someone else. So these are the different categories, of course, starting with banks. You have all different kinds of banks, for example, JP Morgan, and JP Morgan will offer you all kinds of services on behalf of you. They will invest, or for example, they will do the initial public offering for your company so you can get listed on a stock exchange and these kind of things, okay? So JP Morgan, one of the biggest banks in the world. Then insurance companies, a bit similar to banks, also working for their clients. AXA, for example, one of the biggest insurance companies in the world, they will also let's say invest in behalf of someone, let's say in the stock market, for example. Actually, insurances and banks are pretty similar. Then mutual and pension funds. That's pretty interesting because that's very long-term investment funds, very big ones, because imagine, for example, the California teacher pension plan or the Ontario teacher pension plan. I have worked for companies where these funds have invested inside, so they have a lot of things to say in the world because they are pretty huge funds, and they really invest long term. So they want return. They do not really want control over it. Okay, over a company, for example. And basically, especially mutual funds are kind of the way for retail investors, so for you and me, to enter the stock markets usually. Imagine like Charles Schwab or these kind of apps. Well, they are basically mutual funds that allow you to invest as a private investor, right? Then you have the sovereign funds. They became pretty popular over the time and nobody knew them maybe 10 or 20 years ago. But think about countries. Think about Norway or Qatar, for example. Norway and Qatar, they have something similar. They have oil and gas, so they are generating a lot of revenues by selling, well, oil and gas to the world. And they are using sovereign funds. I'm showing you the biggest sovereign funds in the world here. And basically, these funds are the money they have generated. These countries have generated a lot of cash from oil and gas, for example, and they're investing it, for example, into the stock market or into soccer clubs like Qatar did with Paris Saint-Germain, for example, and so on and so on. But here again, it's a long-term strategy and it's on behalf of the country. Yes. And then we have hedge funds. I made an entire video about hedge funds, so if you want to look in detail what the hedge funds is, video here and in the description below if you want to know more. But to make it very simple, it's a short-term speculative fund. To keep it very simple, actually, it's a bunch of rich people who want to find a very good manager who will find opportunities to invest in. They will partner up, share the profits, and invest into very speculative short-term stuff, to keep it very simple. And then you have investment advisors. These are basically one of the biggest group of institutional investors. To give you two examples, for example, BlackRock and Vanguard, but the list is very long. And BlackRock, well, they manage about $7 trillion in assets, which is, let's say, 1.5 times or even twice the size of the GDP of Germany. So you see the huge amount they bring to the table and are investing on behalf of other ones. Now that we have talked about institutional investors and all the different categories inside of them, well, let's quickly talk about private equity in detail. As mentioned at the beginning of my video, I said that private equity are specialized investment companies that do not invest in publicly traded companies such as Apple, for example, but they are focusing and investing only on privately held companies such as, imagine, young Airbnbs and these kind of things. Now Airbnb is listed, but 2 years ago Airbnb was not listed. Therefore, private equity was involved, okay? So what kind of private equities do we have? And we will go from the smallest to the biggest. What you have to understand is private equity 10, 20 years ago, it was kind of a niche investment market. Now that we have so many huge non-listed companies, Airbnb 2 years ago, Uber 3 years ago, and so on, and especially with the huge internet companies, well, private equity became like a huge market, and today you have very big venture capitalist companies, and we will talk about it in a second. So in private equity, sometimes you see private equity being part of institutional investors, but I would like to separate them because it makes much more sense in my opinion. So let's start with the smallest group or fund. This is everything related to seed capital, okay? So you have some seed capital funds, and their goal is to invest in the very early stage of startups. Let's say when a company needs $10,000, $50,000, $100,000, so very small amounts for the startup world, and really very at the beginning of the company when everything can make or break, maybe for prototyping and these kind of things, you know? And Indiegogo is probably a good example, and all these kind of crowdfunded platforms. Then you have the big name you probably heard, which is venture capitalists. So what are venture capitalists? Well, venture capitalists are the big guys behind the huge unicorns. What are unicorns? Unicorns are startups that become hugely popular, let's say a very young Airbnb or very young Uber, and well, they become famous overnight, let's put it like this, with a valuation of more than $1 billion. That would be a unicorn. So the goal of venture capitalists is, of course, to discover and to invest into future unicorns. That means actually venture capitalists are big funds investing into very promising high growth companies. The difference between here and here, this is very small and young companies and very small amounts, let's say up to 100,000 or something like that. And venture capitalists, it's going to be the funding rounds for several millions, 100 million sometimes even. So very big here, and this is very important for the economy, of course, because venture capitalists are kind of driving innovation and well, the companies of tomorrow, right? And then you have a very specific niche category of private equity, which is called leverage buyout firms, LBO. I will make an entire video about it in the future, so make sure to subscribe. I post once a week every Sunday, corporate finance, market finance, so if you want to see something more about leverage buyout, make sure to subscribe. So what is leverage buyout? To make it very simple, well, these are companies or funds that are buying struggling private companies, okay? And what they're gonna do is, maybe they will merge a few of them together, or they will just cut the slack and restructure everything, put a lot of debt on it, and try to make it work, push very hard, and at some point sell it with a profit if the leverage buyout has worked. That sounds very fancy because it is, so I will make an entire video about this in a few weeks probably. So now that you know what retail investors are, so the mere new investors, institutional investors, which are the huge investors that invest on Wall Street and these kind of things on behalf of someone else, and private equity investors who invest exclusively in private companies that are not listed. Well, now that you know all that stuff, don't forget to like this video if this was helpful. Also, don't forget to subscribe for more future content. I post once a week every Sunday, corporate finance, market finance content. I'm also on Instagram, Stan the Finance Man, if you want to find me. Otherwise, I wanted to let you know, enjoy your week, stay safe, stay smart. Bye bye guys.